Good morning, everyone. Welcome to Reitmans Canada Limited's Fiscal 2026 third quarter earnings call. After management's remarks, this call will include a question and answer session when institutional investors and qualified equity analysts may ask questions. To join the question queue at that time, you may press star, then 1 on your telephone keypad. In the interest of time and to allow as many as possible to ask questions, please limit yourself to one question and one follow-up. Should you need assistance during the conference call, you may signal an operator by pressing star, then 0. Before turning the call over to management, listeners are reminded that today's call may contain forward-looking statements within the meaning of applicable security laws. Forward-looking statements involve risks and uncertainties, and undue reliance should not be placed on such statements. Certain material factors or assumptions are applied in making forward-looking statements, and actual results may differ materially from those expressed or implied in such statements. For additional information, please refer to the disclaimers in the forward-looking statement section of the company's press release and MD&A for the quarter. Reitmans Canada Limited does not undertake to update any forward-looking statements. Such statements speak only as of the date made. I would now like to turn the meeting over to Andrea Lombardi, President and CEO of Reitmans Canada Limited. Please go ahead, Ms. Lombardi.
Thank you. Good morning, everyone. Joining me this morning is Carolyn Goulian, RCL's Chief Financial Officer. Yesterday afternoon, we reported our third quarter results. Our news release, financial statements, and MD&A are available on our website and have been filed on SEDAR+. A slide presentation for this earnings call is available on the Events and Presentations page of our website under the Financial and News heading. If you have that presentation open and would like to follow along, we'll get started on slide 4. RCL has 3 distinct brands with their own unique value proposition. At the end of the third quarter, our footprint included 221 Reitmans stores, 84 RW & Co. stores, and 86 Penn locations. Our national network of stores and robust e-commerce platform allow us to serve Canadians from coast to coast to coast. We had a strong third quarter with higher sales and higher profitability on an adjusted basis. Our net revenues were up 3.8% to $194.9 million, due in part to improved traffic in the quarter. Gross profit increased to last year, while gross profit margin declined slightly due to increased promotional activity and foreign exchange. We're happy to report that our adjusted EBITDA was up more than 47% to $5.6 million in the quarter. As we moved further along in our 5-year strategy, we incurred $1.4 million in strategic transformation costs during the quarter, lowering our net earnings for the period to $0.9 million compared to $2.1 million a year earlier. The multi-year strategy we announced back in April is aimed at reaching $1 billion in revenues and $60 to $70 million in adjusted EBITDA on an annualized basis by the end of fiscal 2030. Over that time, we plan to reinvest roughly $100 million in growth initiatives, with about 75% going towards our store network, including renovations, expansions, and new stores, while 25% will be for upgrading our digital technology and modernizing our infrastructure. I'm pleased to provide an update on our strategic initiatives, starting with Reitmans, where customers responded very well to product offering and marketing initiatives, delivering a strong quarter. Our capital investments in stores continue to deliver superior performance. During Q3, we opened 2 new stores, one in Clearwater Landing in Fort McMurray, Alberta, and one at Dartmouth Crossing in Dartmouth, Nova Scotia. In addition, we completed 5 store refreshes, including 2 in British Columbia and 1 each in New Brunswick, Quebec, and Newfoundland. In Penn, our brand strategy is progressing well, with clear improvements in branding and product modernization. Back in August, we launched an elevated 360 store experience pilot in 12 stores. That pilot proved very successful, with those 12 experienced stores outperforming the rest of the chain in the third quarter, thanks to stronger conversion rates and higher units per transaction. Subsequently, in October, we completed the rollout of the elevated service and stylist model across the rest of the stores. We opened 2 new stores in the quarter, including one at Complex Pointe Claire in Pointe Claire, Quebec, and one at Bears Lake in Halifax, Nova Scotia. We also refreshed 3 stores, including one in Saskatchewan and 2 in Ontario. Moving to RW & Co., our continued focus and disciplined execution began to show results in October, with encouraging momentum across channels. The launch of our new concept store in St. Bruno, Quebec was an important milestone, showcasing our refreshed brand direction and elevated assortments for both men and women. We're encouraged by the positive customer response to our new collections and the early impact of our strategic repositioning, reinforcing RW & Co.'s potential as a key growth engine for RCL. During the quarter, we opened a new store at Reitmans Centre in Richmond, BC, and temporarily relocated our Toronto Eaton Centre location to a pop-up space while renovations are underway. I should add, as it relates to all 3 brands, that we remain on track to complete the migration and launch of our enhanced e-commerce offering to Shopify by the end of the fiscal year. The project will elevate our digital experience and deliver a more seamless journey across all customer touchpoints. During the quarter, activities were undertaken towards restructuring, and we established our Transformation in Motion office, which is responsible for driving the execution of our strategic transformation initiatives in support of our fiscal 2030 ambitions. Serving as a strategy control tower, the office ensures initiatives are aligned with our operational and financial targets and focuses on measurable outcomes. And before handing the call over to Carolyn, I'd like to inform our shareholders that our board of directors has recently formed a special committee comprised solely of independent directors to consider and assess moving RCL's listing from the TSX Venture Exchange to the Toronto Stock Exchange. We intend to inform shareholders, when appropriate, of the developments in the special committee's work. And with that, I will now turn things over to Carolyn to discuss our financial results for the quarter in more detail. Carolyn?
Thank you, Andrea, and good morning, everyone. Please note that all comparisons I'll be discussing are for the third quarter ended November 1st, 2025, against results for the third quarter a year ago, which ended November 2nd, 2024. As usual, all dollar amounts discussed are in Canadian currency. Starting with our top line, we had net revenues of $194.9 million for the quarter, which was an increase of $7.2 million or 3.8% compared to the third quarter last year. Comparable sales, which include our e-commerce, were up 2.1%, primarily from an increase in transaction count. The higher net revenues resulted in a $2 million increase in our gross profit, which was $109.6 million for the quarter. However, gross margin declined to 56.2% from 57.3% a year ago. The 110 basis point decrease was driven mainly by higher markdowns and promotional activity, along with a $1.6 million unfavorable impact on U.S. dollar-denominated purchases included in cost of goods sold. Adjusted EBITDA was $5.6 million, which was an increase of $1.8 million or 47.4% from the same quarter last year. Our higher gross profit in the quarter contributed to the increase, partly offset by higher SG&A expenses, including increases in store wages and benefits, as well as store-related lease and other costs. Having said that, SG&A expenses as a percentage of revenues did decrease versus last year. We had net earnings of $0.9 million or 2 cents per share compared to net earnings of $2.1 million or 4 cents per share for the same period last year. Turning to the balance sheet, we ended the quarter with $149.2 million in working capital, including a strong cash position of $119.4 million and a healthy inventory level of $129.6 million headed into the holiday season. We continued to carry no long-term debt other than lease liabilities, and we had no borrowings outstanding under our bank credit facilities. Overall, we remain in a very strong position to advance our growth initiatives. I would also note that capital expenditures totaled $31 million over the first 9 months of fiscal 2026, and we now anticipate full-year CapEx to come in around $35 million. Finally, a quick update on our normal course issuer bid. For the fiscal year to date, we purchased 292,300 shares on the open market, returning $0.6 million to shareholders. With that, we would now like to open the call to questions. Operator?
We will now begin the question and answer session. If you are an institutional investor or a qualified equity analyst wishing to ask questions related to the company's financial or operational performance or its growth strategy, you may press star, then 1 on your telephone keypad to join the question queue. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. We ask that you limit yourself to 1 question and 1 follow-up. We will now pause for a moment as callers join the queue. Once again, to ask a question, please press star, then 1 to join the question queue. This concludes our question and answer session. I would like to turn the conference back over to Andrea Lombardi for any closing remarks.
Thank you, and thank you all for joining us today. We wish you and your loved ones a very happy holidays and a healthy and happy new year. Thank you.
This brings to a close today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.